Octo is pleased to bring you this Planner Unplugged series in partnership with Scottish Widows, focused on helping advisors deliver better outcomes for clients today and in the future. Hello and welcome to the latest episode of Planner Unplugged from Octo members. I'm Katey Pigden, Content Director, and as ever, I'll allow my guests to introduce themselves.
Hi, I am Nouran. I am the practice principal of Roxton Wealth, also the financial advisor and the mortgage advisor, and sometimes the regulated equity release advisor.
That sounds very, very busy. Would you mind talking me through how you got into this in the first place?
Well, I think it just dragged me. Qualification after qualification, I found myself dragged in here. I can't go out anymore. So it started when I was...
Please let me out.
Well, it all started when I was still at uni. I was like trying to spray and pray, see which direction do I want to go into. I did economics, bachelor's degree in economics. So it all started when I was doing a few internships here and there. And then I realized that the best possible career I would get into would require about 80, 90 hours of work every week. So I thought, if I'm going to work 80, 90 hours every week anyway, why don't I work them for myself?
Absolutely.
And then I took it from there. Yeah.
Excellent.
Always wanted to start like my own thing, always wanted to start my own firm. And I got there because I did want to innovate in a lot of things, challenge a lot of things. And yeah, here we are.
Fantastic. So it's probably fairly unusual for someone to do the actual financial advice and the mortgage advice. Sometimes those things are distinct areas. People communicate with each other. So that's a lot to contend with in itself. But what are some of those things that you want to challenge? That sounds interesting to probe a bit further.
Well, I do want to challenge everything, to be fair. We can start by the first thing, the communication with the client in the first place. I wouldn't say I hate, but I would say I'm not a big fan or a big supporter of the one size fits all. So one of the things that I did recently adapt is ADHD friendly communication style and dyslexia friendly communication style. So now when we get a client that has got ADHD, we have got multiple things that we do. First of all, our initial meeting, which is usually about 2 hours, we either break this on like 4 30-minute meetings, or we do break that down to like 2 1-hour meetings. There are things that I do have to send by email as part of the compliance process. But what I also do is that I break down the long documents into short bits. I highlight them and I do some creative stuff in that, send it to the client on WhatsApp and also voice note them what's really happening, make sure they do understand it. For dyslexia clients, alongside the normal like compliance emails, I also do a lot of visuals and voice notes on WhatsApp, which is really entertaining for me, to be fair. And I did have a really good feedback and really good outcomes from clients. Every time I did that with a client, I got minimum of like 4 or 5 referrals, which is very good and very healthy for the business as well.
Absolutely.
So that's like the main challenge I do want to do. And the other challenge I do want to do is, instead of like just having a pension here, a mortgage there, an investment here, I do want us to adapt to a joined up approach where everything is part of one plan, where we take more of a holistic review. I do think that's very, very, very important.
People tend to go and get that mortgage, and it's not the mortgage they want, it's the house, it's the dream of that.
Yeah.
It's probably similar when you're talking about pensions and investments. It's not the pension product, it's not the investment vehicle, it's what you can do with that. And sometimes we forget that in the language that we use, perhaps.
I think what I absolutely love about what I do, and what I absolutely love about starting my own firm, that I did start my own creative planning.
Yes.
Like nowadays, I think I have completely left the book, and like I always I just follow the compliance I need to follow. But like outside of that, I am innovating. So whenever I get a call from a client, like, how I do want a pension. In all honesty, they don't really want a pension. They just want a way to pay less tax, because the accountant did say that, hey, if you contribute that much in the pension, your tax bill will be that much down. Here you go. People hear the word, we can reduce tax. They are all running. They don't really understand what they are doing.
Yeah.
So, for example, I did get a call from a young client, and she's in a unique occupation that, realistically speaking, she would be probably retiring about 35 to 37 years of age. And the first thing she said, hi, I want to open up a pension. I was like, sure, we can open up all the pensions on earth you want, but tell me more. Why do you want the pension?
Yeah.
And then she was like, just because I have a thing for the future. And then I was like, look, I'm chill. You can tell me, why do you actually want the pension? And then she was like, because the accountant said that this is the way we can reduce tax. And I was like, yeah, it's a great way. Obviously, I took her like to everything and stuff like that. But having a more in-depth conversation with her to see where she really wants to be, what's really her ambitions, what does she want to get out of her financial life, I did discover a very important point that for her, it's a matter of life or death to have kids. Like for
Right.
her, like she does want to have kids.
Yeah.
And also speaking more to her, because like I would say it's fairly easy to pick up a conversation with me. And like it's very hard to stop the conversation because I've just never stopped talking. She was like, but I can't see myself having kids before like 37. And then I did tell her, okay, we can certainly think about the pension. However, can we also start thinking that we want to start investing somewhere that would have a good growth? Because probably if having kids is a matter of life or death for you, we might need to like financially plan for IVF.
Yeah.
This was like an, oh my God, phase for her. She was like, financially planning for IVF. And then I did tell her one of the phrases that I absolutely love to use, which is, why would you be depressed and financially stressed when you can just be depressed? I did take her throughout the journey of like planning for financially planning for IVF because it's very rare that this would succeed from the first round. And nowadays, she's referring each and every man and his dog out there to me to IVF plan.
Oh, there we go. Well, I went through IVF myself. I was quite fortunate that it didn't have to factor in financial because got lucky that it did work first time. But it is a real postcode lottery. Actually, depending on where you live in the country, you may not even get it on the NHS for the first round even. So that was quite a lesson in itself of we're fortunate where we live. That worked out quite well. I now have a 3.5-year-old and look and go, how did I go through that process? And now there is this child at the end of it and not a baby anymore. But a lot for people to factor in. And I would imagine where more of us are working, focusing on that career, potentially having children later in life. I was one of those ones having later. There wasn't anything diagnosed as such as a problem, but obviously we're encountering that it wasn't just happening as you also expect. So you think, oh, you've done everything sensibly. Yep. Okay. You're probably a little bit more financially secure. And yet, oh, is that going to happen? Is it not going to happen? What do we do
Exactly.
now?
This illustrates my point. Why would you be stressed and depressed and financially stressed as well? We can take the financial stress out because I can't do anything about the depression or the stress.
Exactly. So you've ended up getting a referral bank of clients
Yeah.
there
And which is
taking
good.
a slightly different approach, I think, because we know there's not as many women in the profession as we would like to see. So that needs to change. But also women getting financial advice or having those investments. And there's a lot of gaps. And unfortunately, women often are on the wrong side of those gaps. Not all, obviously, depending on individual scenarios, but really we should be focusing and tailoring advice slightly differently, perhaps, to the female clients of the world.
And I wouldn't agree when we say slightly differently. We should say 100% different.
Right.
Because
Okay.
look, it's totally different because when I speak now, if we speak like biology and stats, if we look at the stats, obviously I'm not a medical expert, so that's not any sort of advice. But looking at the stats, a woman in her 20s has got 35% chances of natural pregnancy every month. 30 onwards, this would start dropping. 35 onwards, this will drop from 35% to 15%. Looking at the other factors we have got around us, like the increased cost of living, how obviously with the internet and everything, how hard is it to find like a long-term partner or someone that you should feel secure with or anything like that, or to reach even a point of like, okay, now we are stable enough to have a child. That's going to take a long time, a
Yep.
very, very, very long time, especially that now a lot of the things on the internet promotes that, look, if you graduate out of uni or like you leave college or whatever, and you're not happy doing what you're doing, change your career once, twice, 3 times. So a lot of people nowadays don't really reach the point where they are settled in their life, settled in their career until like late 30s or beginning of 30s. A man in his 30s or 40s can potentially have a child very, very, very easy, unlike a woman. So at the end of the day, what I would say is that any woman out there that having a child is a matter of like life or death for her, should be thinking about egg freezing and IVF in finance wise, because we can't really depend on the NHS.
Yeah.
And also bear in mind that there are different factors. Again, that's not medical advice, and I'm not a medical expert. I actually have a very high BMI myself, just as a disclaimer. So not an expert on that, but a lot of people, when they have like higher BMI, they do struggle to get an appointment in the NHS. So you don't really need to rely on the NHS and on the waiting list, especially that it's such an like emotional phase and stuff like that. A lot of people has to go through like 3-4 rounds. So if we financially plan for that, then we are all good to go.
Yep. So yeah, exactly. And if it turns out that you don't need to use that, fantastic.
For the money.
Let's put that towards something else. But it is something to consider. And also, when we talk about retirement as well, people currently face different challenges to those that have gone before. So we won't necessarily have the gold plated pensions. People might have mortgages for longer. You're probably seeing that in terms of advising on mortgages as well. So a lot of these things that we take as assumptions of you'll own your own home by retirement, you'll do this, you'll do that. Generations coming through, not necessarily the case.
And that's why I do try to promote more the idea of the joined up approach, because personally, I am strongly against the fact that we need to wait until retirement so you can be financially free. Because realistically speaking, no one wants to be financially free when they are 70. They want to enjoy life now.
Yeah.
Because what you can do in your 20s or 30s, it is nothing compared to what you can do in your like 60s or 70s. So that's why promoting the joined up approach, we can see where we can link up stuff and work together towards a better financial future and an easier financial future. A very, very, very simple example to that if we hand out a mortgage, we can just hand out the mortgage and leave. Yeah, we did a very good job. See you after 2 years or 5 years when your fixed rate comes to an end. But if we take a different approach of like, okay, that's your mortgage. Now you have got the house. Now everyone is happy. Let's think about how you can actually own this house, how you can get this house to be mortgage free. One of the I'll give you a very small example. Someone who works in like tech sales, very, very highly paid. You're speaking about a base salary, 6 figures. And then on top of that, 30-40 grand of bonus every year. Very good income. If we work with an individual like that, and then we start exploring the idea of a private pension, which will effectively reduce his tax bill now, help him save for retirement tomorrow. And also, if he has a very big mortgage today, what we can potentially do is that we can subconsciously link the private pension and the mortgage. Because if we manage to build up a very big, healthy pension pot, that by the time he's 58, 25% is equivalent to whatever is remaining on the mortgage, then he can draw out his 25% tax-free lump sum and fully pay off his mortgage. So if we work together on like planning this pension pot, how we can grow it, what are the right investments to get in place, what's the right level of contribution. And on the other hand, we are working on the mortgage. Every remortgage, it's not just some sort of like rate hunting. We are trying to do a real review. What has changed in your financial life? Can we cut down the number of years? Explaining to them how to fully utilize their 10% overpayment allowance every year. Then potentially we can reach the level that 25% tax-free lump sum from the pension, equivalent to what's remaining on the mortgage. 58, you're mortgage-free, happy days.
There we go.
That's why I promote a joined-up approach.
Does protection factor in much to what you're doing as well? So obviously we're talking about building this wealth with people and getting to that stage, but how important does protection factor in?
I think personally, I think protection is very, very, very important. But I think one of the biggest challenges we have got in the industry now is that it's extremely missold. And when I say missold, I mean that we don't need to like get a first time buyer and start telling them, hi, you need to get a critical illness insurance, life insurance, income protection. You need to protect the dog and the cat and the wall and the art and everything around us. We need to take it easy and start taking what I call it a step towards. So for example, when I get a first time buyer, if it's like a couple married, they have got a young kid, the first thing I would say, guys, look, let's make sure that we have got X amount of money saved out of our budget to get life insurance in place. Why? Because life insurance is extremely important. Because nowadays, with the increased cost of living, all of these sort of things, it's very, very, very important to have life insurance in place. Because realistically, one income wouldn't be able to make the household survive and pay off the mortgage and the bills and everything. Once we have concluded on the life insurance, that's when we can speak now about critical illness Why is it important? How is it important? We don't need to insure the whole sum because of how expensive it is. We can just take a step towards. Then we can speak about the income protection. But when we see someone coming in for the mortgage or for a pension or for an investment, and we start the conversation by, we need to get you protected. We need to get you the protection. We need to get you the protection. They're not going to listen.
No.
They want the mortgage. They want the investment. They want the pension. Give them what they want first and then advise them on the insurance afterwards. So just to break down that ice of the ability to listen. So that's what I do. But also, on the other hand, we need to be fair when it comes to the insurance. So we shouldn't really be tolerating the concept of loaded premiums because it's not fair for the consumer. And I'm not really sure how does this fit in the consumer duty, but I'll just move on and keep my opinion.
Well, I know the FCA did a review into the pure protection market, and I think there was some concern around, well, what's it going to look like in terms of loaded premiums? I have to admit, I need to go and reread. It didn't seem to come out as negatively as people potentially thought on some areas. But yes, it's an area that I think, as long as things are explained to a client properly, and I think from what I could see online, that there was potentially advisors didn't even know that this was a problem within organizations.
Let's be honest. Let's speak like out of the textbook. If you come to me now and tell me you can buy this pen for £5, or you can buy it from my next door neighbor for like £2, I'll go to your next door neighbor. I'm
Yeah.
not going to take it from you. Okay. So I can't really think of any consumer, no matter how good the advisor is, that they would be sitting in front of me as an advisor. And then I tell them, hi, by the way, this premium can be 50% less or 20% less if you take it from another advisor. It's just because that's the way I structure my premiums. And they'd be like, yeah, it's fine. Come on. Most of the time, personally, I do ultra high net worth mortgages. I do big investment bonds. I do big pensions. And believe me, even the ultra high net worth, they are looking how to save the £10 and the £20 every month.
Yeah.
So I can't really think of any client that I would tell them, yeah, you can get that 20% cheaper. And they're going, no, we'll take it from you 20% more expensive. So I don't really think any client would 100% understand what's a loaded premium, and they would still subscribe to it. Because where is the added value? And also, on the other hand, if we are speaking about consumer duty, if we are going to load premiums for whatever reason, isn't it more sensible to get higher cover in place instead of paying extra for the same cover?
Yeah, exactly. So yeah, lots of questions around that. But interesting that a lot of wealth advisors don't seem to bothered by protection. Or actually, when you said about the mortgage, from my own experience when I was getting mine, these other things were said as if they were like dirty words, like critical illness, or you might want to consider income protection. The person seemed to feel uncomfortable. Now, obviously, I can't talk on behalf of every mortgage advisor, and I'm sure many don't take that approach. But it seemed to me that that person wasn't putting the importance on it. So therefore, it didn't feel important to me either.
Speaking in all honesty, take it from a commercial perspective as a business owner or as a self-employed individual or as an employed individual who has got a certain set of targets to hit. If we sell now, let's say £50 protection premium a month, what am I getting out of it? If I do it on non-indemnity, I'll be getting what, £4 a month? Who cares?
Yeah.
It's going to take years to build up a good non-indemnity like lead funnel. If I do it on indemnity, okay, cool, I'll get like 1,500 or £2,000 straight away. Amazing. I would be carrying a liability for 4 years that should this client cancel, I'll be in debt. I need to pay the money back. So I think the way commission is structured is wrong in the first place. Or I wouldn't say wrong. I would say it can be better.
Yes.
Let's put it like that. It can be better.
Yeah.
And the way protection is sold, we need to stop referring to protection as being sold and actually move to an era where we are giving protection advice, where we look at this person's circumstances and we give logical advice. Because logical advice doesn't mean that we protect the dog and the cat and the art on the wall and each and everything around us. Logical advice means, like, from my point of view, I might be wrong, but logical advice from my point of view means that we need to set up the priorities. Okay, now, like, sole provider, you've got a family, we need to make sure this family is protected should you die. Then we can move on to the second priority. We need to make sure that you and your family are protected should you get critically ill. Then we need to move on to the third factor of, we need to make sure your income is protected. We need to make sure you have got accident cover. We can't just set up £1 billion of protection in the same day or in the same meeting. Because very simple, people would be very convinced. People would be really excited to get it done. Yeah, let's get it done. Let's get it over the line. You're brilliant. You're amazing. That's good. 2 months down the line, oh my God, what are we paying for? Cancel that. Let's get a Papa John's pizza instead.
Yeah. Do
So
you
it's
think actually because people can't see that when we talk about selling protection, most of us don't want to think these things will happen to us. We seem to think we're into it somehow. These terrible things, they happen to other people, they don't happen to me. But actually, because we can't physically see or touch something, is it hard to determine and explain the value in that sense?
it's look, at the end of the day, I think for the next 10, 15 years, no one is going to be extremely successful unless they understand the concept of behavioral finance and behavioral economics. Because anything people cannot touch, they are not going to understand it unless you communicate it in a way that's extremely accessible and easy for them to understand it, showing them the value. It's same applies as, for example, if we walk down the street now to any college and we speak to the kids inside and be like, what do you want to do? "Oh, we are going to uni." "What are you going to do at uni?" "I'll do arts and crafts. I will do this. I'll do that." "So what do you want to do?" "This, I just want to have university life."
Yeah.
Did they think about the student loan? No. Do they know what's going to happen to their first payslip once they go out of uni? No. And the reason being is that they never touched the money of the student loan. That's why they took the student loan. They have lived their best life at uni and they don't even know what did they study. Another problem. So it's not only when it comes to the protection, anything that you don't physically hold, you don't feel it. That's why it's very, very, very easy for people to spend using like credit card or overdraft because they didn't earn that money. They didn't feel that money. They are spending that money. But look, someone who's paid, let's say 3 grand after tax, if you pay them that by bank transfer, they will happily spend it. Try to pay them that in cash. I bet the money will last longer because they will feel it.
And now for a few words from our content partner, Scottish Widows.
Making it easier for advisors, Scottish Widows brings market expertise, dedicated distribution support, and practical insights on the topics that matter, from consumer duty to the protection gap. You'll find advisor-ready tools, explainer content, protection insights, and regular thought leadership, alongside a team that can help with cases big and small. For more information about Scottish Widows and the support it provides to advice firms, speak to our business development team by emailing protectsales@lloydsbanking.com.
Actually, as we're sort of becoming a bit more of a cashless society, do you think that's part of a problem of people understanding sort of more
It's going to be a problem. It's going to be a massive problem because we are raising now a generation where they don't see the value of money. They just see the Apple Pay, tack, I've got what I wanted, tack, I've got what I wanted. They can't see the value of money. And no one is there to teach them the value of money. And obviously, what's even more and more dangerous is how easy it's becoming to get in debt. Because very easily, an 18 years old can go get a car finance for 300, 400 pounds a month.
Yeah.
It's fine. And obviously, put on top of that TikTok, Instagram, and all of the other social media and like the show off competition people are having, which is not very good, not very healthy financially to have, especially that now you see a lot of people nowadays that are very, very, very high achievers. When they come in, you look at their bank statements and you go like, why are you spending like that? And the first answer they would come up with, because this is how we live. This is how everyone within like our community lives. So we need to keep up with the same lifestyle. So we have got that mentality. A lot of parents do have it. Children are growing up, households like that. They can't see the value of money. They don't feel the value of money. They just see Apple Pay. We are going to reach a very nice disaster in a couple of years' time of how people are treating money.
What do you think in terms of the so-called finfluencers out there? Because obviously people like yourself are putting out educational pieces, trying to tailor things slightly differently, but we have got this battle of people just putting out information that's completely wrong.
I mean, look, at the end of the day, I can't really blame the fin influencers or I can't really blame people who listen to them. If we need someone to blame, we can go blame the regulator. Because, for example, I can't open TikTok now and just post a video. Because why did I say that? Why did I forget this risk warning? Why did I forget this? So as an educated person, And as someone who has got bachelor's, master's, and around 7 or 8 other qualifications, and I constantly do my CPDs, exams, and everything, I can't really say what I want unless I have to go through compliance and a very long process. Obviously, I'm very, very, very lucky that I'm under such an amazing network. They approve for me stuff in like 2 hours, but we are still limited in terms of what we pay. While on the other hand, Bob sitting in the pub, dropped out of GCSEs, doesn't even know that today is Tuesday. He would be posting whatever he wants.
Yeah.
Happy days. How to convert a 3-bed into a 10-bed HMO and make £1 billion while you're sitting doing nothing. Can say that. I can't say that. So at the end of the day, we regulated the educated people. We made their life so hard. Each and every day, they bring out new rules. Effectively, all the bigger networks, because they have got more advisors under them, they are making it harder and harder for advisors and for people who are qualified to give advice to go out there and give advice. On the other hand, if you're not ready to take a mortgage now, if you're not ready to open an investment or a pension now, no advisor is going to sit with you. Nobody has the time. There is no reliable platform or channel to deliver financial educational content. And even when you try to deliver financial educational content, it's in a way that suits the person delivering it. No one ever thought that, oh, how about we do a podcast like Finance for Distracted Minds? We just do like a 10-minute episodes focused on one topic for everyone who has got ADHD. How about we do more visualized stuff for like dyslexia? No one ever thought about that. So effectively, we give the room and we give the side for people who are not qualified to go out there and give advice. And they will always listen to those people because those people are not boring. The reason I am boring on social media because I have to mind my language. Otherwise, my license would be at risk. But they don't have to mind the language. They can say whatever they want.
Yeah.
And what I really can't understand, I can't really understand where is the point of the risk warning. So if I'm speaking about mortgages, and as long as I put the warning of your home might be repossessed if you don't keep up with the mortgage payments, does this solve massive financial education problem we have?
There's a whole thing with the risk warnings, isn't there, really? Because actually we want more people to be investing now. There's the whole growth agenda from the government, the regulator having to be seen to be supporting that as well. And actually a lot of it is because the way we do capital at risk, everything is very we can understand then why people might go, oh, actually I've worked quite hard for that money. That's quite scary. That's at risk, rather than we don't seem to talk about the risk of inflation so much, the risk of your wealth just being eroded in that sense of by doing nothing. Sometimes we don't talk about the risks of retiring without that substantial amount to support you to have that comfortable lifestyle. And yet a lot of it does seem to stem from the lack of financial education in the first place.
What I absolutely love is that I did see a person who's supposed to be an adult, well-known, extremely educated, to come up on social media and say this exact statement. The professional does not work in financial services. He works in property sourcing, where he said in his full confidence, whatever money you will invest in property today, I can help you to make sure that this money is doubled in 10 years' time. My biggest argument here is, if I invest 100 grand today in property, probably in 10 years' time, they are going to be 200. Did anyone speak about the idea of inflation or buying power, that the buying power of the 100 today is going to be equivalent to the buying power of the 200 in 10 years' time? No. But everyone is liking his video. Yeah, great. What's the investment strategy we have now?
Yeah.
The reason he's seen because he doesn't have a regulator. But the reason I'm not seeing, the reason other people who are way, way, way better than me, way more knowledgeable than me, are not seeing, and they can't get their message out there because they can't. They have to put all the risk warnings everywhere. They have to be mindful of what they're saying. They can't give number illustrations or anything like that because then their license would be at risk. And which person is going to put their license at risk? No one.
So we have to go so vague in the end, don't we, really, in terms of maybe consider doing this, and obviously. So what do you think in terms of targeted support and the push around that? Do you think that will then help put people in the right direction, where companies will be able to say people like you should do this or are doing this?
I think this would bring more of disasters because personally, I do absolutely try my best to get out of people's head the idea of your friend did that or someone same as your age or your salary or your job description did that. This doesn't mean that you should be doing the same, because each and every person is different.
Yes.
Like extremely different. For example, I'm single. I don't have any dependents. I don't have kids. I don't really care about having kids. All what I see in my life is just working and growing my family. Someone else might be my same age, might have the same income, everything same, but they might have a partner, they might have kids, or they might have the ambition to have kids. How on earth would I have the same financial plan like this person?
Absolutely not. Yeah.
However, on paper, we are the same age, same income, same job. So it's all about what is it that you want to achieve out of your financial life? Look at it. It's not about let's maximize the ISA, let's maximize the pension, let's do this, let's do that. People in your age, people in your region doing this. It's about what is it that you want to achieve.
And this is the thing, isn't it? I think we've got such extremes where like we said, it's either very, very vague and therefore is it really worthwhile? Is it making even a dent in the surface? I'm not sure. Versus the other end where it's so good, come and do this, do it instantly, blah, blah, blah. And obviously most people, unfortunately, will probably fall in the middle of either doing nothing or looking at those things and realizing that's not right either.
It's extremely overwhelming for an ordinary person. When I speak about ordinary person, I mean someone who wakes up at like 6 or 7 in the morning. They just go to work. They want to leave work at 5 o'clock and just go home, walk the dog, go to the gym, and just have a peaceful life. We need to put the ordinary person in life. Some people, they don't want to take over the world. They don't want to have the billions of pounds. They just want to have a normal life. These people, they feel extremely overwhelmed when they see the two extreme sides. And this is why I think it would be a good approach to start changing the way we communicate depending on the person in front of us.
Absolutely. Yeah. I think that's how we came across each other's stuff.
Yeah.
I saw one of your posts on LinkedIn, the fact that you were saying about tailoring advice to someone, trying to make sure that you're talking to that person in front of you, because we are all different. We do approach things in a different way. And I pointed out the podcast with Laura Clark because she was very much in terms of trying to advise neurodiverse clients. And we talk about that. But like we said, each individual comes with their own things as well of how they behave around money, how they process this information. And like we said, it can be quite confusing of which way do I turn? Where do I start here? How do I get on this journey?
Exactly. And I think probably women suffer way more than men when it comes to these sort of things, because in general, the whole financial system, from my point of view, I'm not sure if what I'm saying is right or not, but from my point of view, the financial system was created by a very wealthy man for all his wealthy mates. So women doesn't really fit in that, because normally men doesn't really get pregnant.
Yeah.
While on the other hand, a woman, alongside her normal maternity leave, she might want to take more time off work. She might want to feel that, look, I want to take a 3 years career break to spend more time with my children when they are still young. All of these sort of things, we never take it into account because it was never needed by a man. So this is like a very, very, very big gap when it comes to women.
Yeah.
So that's why I think it's getting more and more overwhelming, because whenever I sit with a client, when it's a guy, it's way easier to have a conversation, way easier to everything. While with a woman, sometimes it's like double the effort, because normally they never thought that financial planning is for them.
Yes. There's a problem in itself there, isn't it? That assumption of that's not for me. I'm excluded from that world. And how do we make that more inclusive for people? How do we make that the space that actually financial planning is for you? It potentially should be for everyone, but how we work out and make that viable, I suppose.
It's just changing the way of communication. Like, first of all, I think my biggest enemy in my day-to-day job is the email. I hate emails. Why are we sending each other emails? Hands up, I'll send the illustration and the suitability reports and everything by email. No worries about that. But why are we asking questions and responding to each other's on emails? What happened to like WhatsApp and WhatsApp voice notes? Because the more you get to know a person, the more you get this person to open up, the better you can help them put together a financial plan. So that's the thing. The thing is, when it comes to men, they tend, obviously not all men, but a lot of men, they tend to be way easier to just come on a video call, on like a Teams chat or like face-to-face meeting, and from the first time be like, I want this, and that. While on the other hand, it's going to take about like proper 45 minutes or 1 hour of like ice breaking and getting a woman to be, obviously not all women, but a lot of women, more comfortable to speak about their targets and their goals. Because the problem is, a lot of men years back, when they speak, everyone would be clapping. Yeah, you're right. You're amazing. You're fantastic. You're the best. That's a great idea. And a lot of women, whenever in the past, obviously, thank God, not now, in the
Yeah.
past, whenever they speak, whenever they express their opinions or ideas, they would go like, what are you saying? This is nonsense. It doesn't work like that. So there is like a confidence issue when it comes to women, which is harder for women to express themselves. So I
Yeah.
think it's extremely important to just adapt the way of communications. I'm not against compliance. Like we can still do whatever we need to do in terms of like emails and suitability reports, but it's not about just chunking a bunch of things and taking like a bunch of boxes on paper. It's more about what is it you need? How can I actually support you? It's about having that conversation, because when you have a conversation, when the person in front of you feels that you want to bring out the best for them, they would start talking to you.
You mentioned the regulation earlier, and obviously how challenging that can be. What else do you think is wrong with that? Because we touched on consumer duty, and I think the regulator itself has admitted you potentially created a lot more red tape than anticipated. The knock-on effects of that, the unintentional consequences, has actually resulted in less people getting financial advice, perhaps. So we've now got that uphill struggle of, okay, how do we turn that around? Maybe they would answer targeted support will go some way to do that. But has compliance just become too scary for people to even think outside of, well, how can I communicate with my clients differently? Because it does feel like we get a bit of conflicting information. Vulnerable clients, we're told everyone can be vulnerable at times. Not everyone's vulnerability will present exactly the same. Yes, on the other hand, it's, have you grouped your clients by this segment? Are they in this sort of category?
Well, personally, yeah, I will do what I have to do compliance wise, but my personal beliefs and the way I work, and I wish a lot of like more people can try to adapt to that. I think everyone is vulnerable. And the very simple reason for that, no one has got the right level of financial education. Okay. Unless we are speaking about the portfolio landlord with like 20, 30 properties who have been doing that for like ages. But believe it or not, even this one is vulnerable, because I was speaking to one of my portfolio landlord clients who has got about 14 properties and he didn't know what's a further advance. Everyone is vulnerable. So the problem is, what is it that we actually have to offer to vulnerable clients? Do you want a family member to come and support you? Who on earth would want to sit having mom or dad sitting next to them, giving them life advice?
Yeah.
Most of the young adults, their biggest struggle in life is trying to prove to their parents that they are independent. So I'm supposed to go tell them, you're no longer independent, get your guardian in the call to explain to you, to help you, to support you.
I think also older clients, not necessarily are going to want their grown-up children feeling like, hold on a minute, I'm here, I can still manage these things.
Exactly.
So not wanting to necessarily admit they may be in a vulnerable situation.
Exactly. Look, no one is going to admit they are wrong. If I look at myself, each and every time I would do like a disaster, I would never admit I'm the problem in like my personal life, obviously, not work, but personal life. Each and every time I would do a disaster, it needs to be someone else's fault.
Yeah, can't completely be me.
So at the end of the day, how are we expecting people when it comes to money? Are we seriously expecting someone in their 20s or 30s to go speak to mom or dad? Hi, I'm taking out a mortgage. I need you to support me. Hi, I decided to open up a private pension. I need you to support me. No.
Yeah.
Are we expecting from an adult who's like 60 or 70 all the time, every Sunday, he gives his kids like lectures about how life works? Are we seriously expecting him or her to bring their grandchildren to the call to explain to them how stuff works in terms of like investments and attitude to risk? No.
Also, as we said, they don't necessarily know these things. They may have done a few right things along the way, do some wrong things as well. This isn't the person necessarily to pass on those lessons. But also, we're not very good as a society, very generally speaking, again here, but of talking about money and talking about these things. This is very much oh no, better not discuss that.
Yeah. And also bear in mind the thing, yeah, that if we speak in all honesty, people has got like so many things in their bank statements and stuff like that they do want to speak about, and they would never be able to speak about it in front of like anyone else. Like, for example, a handful amount of people would have a handful amount of OnlyFans subscriptions on their bank statements. Okay. one of the first questions they do want to ask me during a meeting, okay, is my OnlyFans subscription going to affect my mortgage application? That's like a number one question I get asked by a lot of young and old clients. Okay. Do you really think if we have a parent or a family member supporting that person because they are vulnerable, do you really think they would be free to ask those questions?
No.
And also, if I bring in someone to support them during the meeting, which is fine, like if they want, obviously it's up to them. I'm pretty flexible, as you can tell. But what am I doing? Because they would ask a question, the person supporting them would answer the question, then what am I doing? I better take them and go to the pub, have a couple of beers, and then we are good to go.
Yeah. Well, what seems great with you is that clients are prepared to open up and tell you those things, whether it's, is that going to affect my mortgage application? Really, the real reason I'm setting up a pension is because I want to save that tax, or I've been told elsewhere. Advisors generally seem to have that privileged position that they are finding out a fair amount of information about that individual sat in front of them.
Well, I mean, I'm chill. I've always said it. I always say it to like everyone who works with me, all my trainees. Obviously, my social media manager absolutely loves this. Yeah. So I always tell everyone, any conversation I have with a client have to feel like one of two things. It's either we're in the pub having a couple of beers, or we are sitting in one of those like Arabic cafes having a shisha. Okay. Anything outside of this, I'm not going to work. So that's the thing. Me and the clients, we vibe straight away because they feel I'm chill. I'm not bothered. Just tell me what you're thinking and let's do it together. And
There's no judgment here.
well, no judgment, because whenever I feel that someone is like completely overwhelmed, I tell them about some of my personal disasters. So straight away they feel like, yeah, it's fine. Because for example, I had a client a couple of months back, very, very, very high achiever in a very good position, very good job, very nice person, extremely high achiever. He had a default on like a credit card. And then the thing is, like the moment we started the meeting, the moment he started justifying his default, like it's a thing to do with his reputation. And then I told him, you know what? I'm a financial advisor and I do have a default myself 3 years ago, which is true. I do have a default myself 3 years ago.
I think hearing the mistakes that people have made is really important as well, because we can talk about the qualifications, we can talk about the communication, but someone being able to relate to those things and realize we're all human. We've all made we've all made mistakes along the way, right? I've been thinking of introducing a content series on Octo, mistakes made, lessons learned, because one business person will have set up something, they'll have done something along the way. Somebody else could learn from that and not trip over that hazard. Somebody else will have done something. We'll all have done something, and we might catastrophize them more than we need to, or actually sometimes it can be really quite nice to sit in front of that client and go, don't worry, I've done that as well.
Yeah, even when it comes to clients who did invest a lot of money in like crypto and lost a lot of money in that, whenever they say that, I tell them, well, you're way better than me, because personally, a few years back, I did invest money with one of those people online saying, give me like 2 grand, I'll return it back to you 10 grand in like 2 weeks. So I tell them that I did that myself.
Yeah.
And like, more embarrassing, I did that at the time where I was supposed to be like a qualified trainee. So
Right.
no shame, it's fine. So, and this is the benefits of not using the email, because I'm not really going to type to someone an email telling them, don't worry, I have been scammed myself. I do have a default a couple of years back. It's fine. Can't really write an email saying that.
No, exactly. Tell me about setting up the business then, and what that's looking like now. You said obviously other members of the team training. What's that process been like?
This process was like, oh my God. This, I can't find the word to explain that process. But one good thing I did during that process, or like, I wouldn't even say one good thing. I would say one thing that I'm extremely grateful that I did during that process is choosing the right network.
Yeah.
Honestly, they have made my life way, way, way much easier. So like, I'm not going to mention the name because I don't want to be extremely biased to them, but they have been amazing, because I thought it's going to be an absolute nightmare with the regulator. They handled everything. It was still a nightmare, don't get me wrong.
Yeah.
Anything that touches the regulator is a nightmare, but they did handle everything very, very easily. They made compliance so easy. They made everything so easy, which did allow me to just focus on the business. Obviously, when it comes to the business, it's challenging. every day is challenging because it's your own firm reputation. Obviously, training people is, oh my God, that's extremely challenging because it's totally different when you're training someone because you're their manager, you're not really paying their salary. That's very easy. I will take that. But when you're training someone while you're also the manager, while you're also the owner, you're the one paying the salary. Oh my God, that's extremely challenging. And also the fact that you're now the practice principal of the firm. You need to take care. You need to do this. You need to supervise this. You need to supervise that. Like, oh my God, what did I get myself into? So it's different. It's a challenge.
And how often do you have those moments of what did I get myself into versus
Every day.
be in the right place?
Every day. But I've always told myself, so I have got 3 concepts that personally I live by. Concept number 1, smash it or crash it. Honestly, I tell everyone, as long as my FCA number is safe, we are not breaching any compliance. Let's see. Let's take the risk and see if we are going to smash it or crash it. So I'm very open when it comes to that. I would say my risk appetite is way higher than adventurous, which did help me a lot in growing the business. And the second concept is go hard or go home. 100% it's either. But also the third concept, which I did steal from a lot of the TED Talks I do listen to, is like, if you want to be good, it's fine. But if you want to be the best in what you do, at some point you would need to put up with an amount of stress that normal people can't really put up with it.
Yeah.
I feel that a lot of times I do put myself in like a notable amount of stress that I look back at myself like 5-6 years back. I would have never handled like 1% of that stress. It's challenging to have your own business, especially if you have the drive that you don't want to just make a couple of thousands every month. You want to build up a firm. You want to open, like, you've got 1 office. You want to have 2 offices, 3 offices, 4 offices. And what's even more challenging, that I have a thing, I think it might be like a critical illness or whatever, of that I always want to innovate. I can't see a process and just follow the process. I am always trying to innovate. So like I did establish like a software firm alongside the advisory firm. And all what I'm doing is that I am trying to innovate if we can now produce the suitability report in a way that's ADHD friendly or dyslexia friendly. How on earth am I going to innovate that? I don't know. But I want to innovate.
But I think that is a challenge for financial services in general, that innovation. And there's probably been the challenges that financial services have been a bit slow at adopting technology in the past. And obviously now we're all talking about AI and are you using AI in your business? Well, yes, but how are you using it in your business is probably more important. And what are you actually trying to solve? And how is that helping clients ultimately and freeing up the time? So yeah, where can we innovate further? I think I saw a quote of yours that was like, the financial industry is broken. Happy to delve into that a little bit more about what can we do to fix it?
Well, first of all, we need to throw the book out of the window, get out of the book and just innovate.
Yeah.
As long as we have the client best interest in our heart and soul and like in the middle of everything we do, we need to innovate. We have to innovate. Look, AI is absolutely great, but AI is not made for every man and his dog. We need to use our mind. So, for example, we spend so much time doing the admin. We spend so much time sitting with the client in a fact-find meeting. Hi, Mr. Customer. So how much is your annual salary? So how does your income and expenditure look like? How much do you spend on clothing every month? How much is your council tax bill? Listen to this. This is the biggest innovation I'm working on now. And should I succeed in that in a couple of weeks' time, I think it's going to be a game changer for my business. And I might potentially start leasing it to other businesses. Nowadays, either you come in for an investment pension, mortgage protection, you come in, you want to say hello, you provide us 6-month bank statements from all your bank accounts, all your credit cards and everything. Then it goes on a system that's powered by the RAC technology, which is the latest AI technology. This RAC technology studies those bank statements very, very, very well. And then it produces a report, which is called behavioral finance report. It literally analyzes each and everything. It analyzes your behavioral spending when you get paid, at the end of the month, at the middle of the month, different like intervals, when you get paid, when you get a bonus, each and everything. How is your financial behavior going on in general? Because then we can innovate. And instead of asking the client in a mortgage fact-find meeting, so what's your monthly budget for the mortgage? We can turn that question and be, look, this is your financial behavior. Let's discuss together what budget would you be comfortable And you're not going to break the bank just to get the house, because you will be happy getting the house for like 2-3 months. But after that, you will be smashing your head to the wall. What did I get myself into? Now I have to work like there's no tomorrow to pay for it. Same applies for like pension and stuff like that. Yeah, we all want to save for retirement. Everyone should save.
Actually, on that behavioral piece, though, it's such a fascinating thing with how we do behave around money, and we're not always the most rational creatures in how we do behave. So we might say one thing and do something else. We might know we should behave in a certain way, but we don't. I remember years ago something not working on my computer, speaking to the IT person, and I was just told it should work. And I said, well, I know, but it's not. And that's part of the problem. I should choose a salad, but I'll often choose chips. It's that thing of like, no, this isn't working as we should. But we do have these behavioral biases, these ways, and actually maybe probably seeing that data of how we are spending our money tells a story that we have either wanted to pretend doesn't exist.
That's the thing. And that's the slogan of my firm. Finance that fits you, not fitting you into finance.
Yeah.
So that's fine. If you behave like that when it comes to money, I'm not the therapist, I'm the financial advisor. So let's see how we can work around it. Because look, it's very hard to convince someone to give up a thing they love. Absolutely, extremely hard. Like, because personally, as a financial advisor, I can't give up the stuff I love. And I spend money extremely impulsively.
Yes.
So how do I expect from someone else to do that? And also bear in mind that emotional side, 90% of the people or even higher, they don't really like the job they do. And they just show up to work because they have to pay the bills. Come and tell them, don't spend on like, what's the name? ASOS. Don't spend on Amazon. Don't go shopping. Don't go out. Don't go to the pub every Friday. They will tell you, no, what am I living for then?
Yes.
So
and you find when you're trying to balance planning for the future and living for now, obviously, without being too reckless, but there is that enjoy life while you can.
100%. I live by that myself.
As we're coming to an end, Nouran, is there a personal money rule that you live by?
Well, let's not take my personal money rules, because this is going to be deemed as wrong advice, damaging advice. So I would say the rule, I'll say a good rule or a good concept to go by, that life is not about evading tax. Life is not about expensing each and everything around to make sure we don't pay £2 extra in tax. It's about looking at the bigger picture. It's about looking about, okay, even if we don't declare this whole lot of expenses and we pay, for example, corporate tax or income tax, then what can we achieve out of our money? So I would say it's all about looking at the bigger picture and looking more towards what we can achieve, instead of like, what can we save now? What can we do now? It's about looking at tomorrow and after tomorrow and 1 year and 5 years and potentially 10 years. But also like, take it easy, because there is no point to be like 80 with 10 million pounds in the bank when you didn't enjoy life. So just, it's about reaching that balance.
Yeah, absolutely. And what advice would you give to advisors that are listening, thinking, actually, yeah, I do want to do something a little bit different and try and innovate within my business, but have been constrained or feel constrained by regulation and compliance?
Change your network. That's it. In all honesty, because like, without being biased to anyone and with all my due respect to everyone that I'm not going to mention their name, I remember my older network. If I were to speak from now until I die about ADHD and dyslexia accessibility, probably no one would have ever heard me. Under my current network, it took me like a couple of hours of speaking about it. And yeah, as long as we are putting the client at the heart of what we do what we want. So I would say, if you really want to innovate and stuff like that, choose the right environment around you. If your network or if whatever firm you're under is holding you back from innovating, just leave it, move on, because I think the right to dream and the right to innovate are two major rights. They are more important than human rights to me.
Excellent. And anyone looking to break into the sector and to actually follow in the footsteps, is there any advice you would give to them about starting out?
Oh, I would say follow my joined up approach and get qualified in everything and make sure you're giving holistic advice.
Excellent. Well, thank you very much for joining me. I really appreciate it.
No, thank you for having me. It was really nice speaking with you. And hopefully I didn't breach any compliance.
I hope not.
Expertise that helps make advice easier. distribution support, advisor tools, and thought leadership from Scottish Widows. For more information about Scottish Widows and the support it provides to advice firms, speak to our business development team by emailing protectsales@lloydsbanking.com.